Welcome back, and I have a riddle for you. What has 5 wheels and most people own at least one? A vehicle. You get it? The fifth wheel is the steering. Oh. What's shocking is 91% of households use at least one car, so it makes sense why the car industry has such a large impact on our lives. And I'm happy to finally say we have some good news because the used car market is down 3%. But that's short-lived because Jeep sales fell by 20%, the cost of car ownership is up by $629 a month, and Mercedes is now making you pay a monthly subscription just to unlock features that your car has already built in. So today, I want to talk to you about the industry that is slowly making America go broke. The car industry is such a lucrative business at $1 trillion industry, so in this video, I'm going to talk to you about why it now costs $11,000 a year just to own a car between payments, fees, fuel, and greed. And then I'm going to go over what you can do to make car ownership more affordable for you. But first, if you could like the video, it helps a small channel out like me so much, and I'll owe you one. It's no secret recessionary times are coming, if they're not already among us. So one of the best things that you can do for yourself is reduce your monthly expenses. Besides housing, car payments actually are responsible for the biggest part of a family's budget. That's why the car payments are going to be the first reason why only the rich can afford to buy cars anymore. Payments on car loans have been growing this year, and they have topped out at $716 for a new car payment, and the used car payment is all the way up to $526. Now, it might be kind of a hot take, but I think part of this reason that everything is so expensive is the greedy nature of us humans. I've actually seen trends on TikTok from dealerships that have been bragging about selling cars to young adults who simply cannot afford it. And I know they can't afford this because they post the terms on their loans in the videos. So these dealers, they're not only bragging about taking advantage of these kids, but they're actually making the argument for me that we no longer need car dealerships, but that's a different topic, sorry. The greed really comes back to people, particularly the younger generation, that are making the mistake of trying to purchase a car that they really can't afford. I've never understood the need to buy things just to one-up your friends or create this fake social status that you don't really have. If you bought a Mustang, but you're only 18 years old and you can't afford payments, you don't look cool, you just look dumb. And it's these young Americans that have borrowed way more aggressively than any age group to buy a car that they can afford because they're spending 30% of their post-tax income on car payments. Now, I'm sure you've heard about being mortgage broke, but I guess we got to add being car broke to that. Well, now I guess life is telling these people they can't afford these cars either because delinquency rates are hitting new highs with 4.3% of 18 to 29-year-olds falling behind and going delinquent on their payments, rising to the levels that we had seen in 2008. I do recognize it's not completely at the fault of these young adults in America here, and one of the main reasons that we are all feeling this pain in the car industry is the Federal Reserve's relentless increase in interest rates. To make a complex issue pretty simple, the Federal Reserve sets the baseline interest rates on loans. In 2022, interest rates were nearly 0%, and now they have climbed all the way to 5% baseline. And this rapid increase in interest rates directly affects what people can pay on their loans for their vehicle. A new car interest rate will now cost you 7% APR, but going back to 2022, that same loan would only be at 3.99% APR. In other words, this same loan would be another $60 a month higher payment, which comes out to an extra $720 a year. And in other words, again, you have to pay an extra 72 Qdoba bulls just to have the same ride. But it doesn't end here because this adds an extra $4,000 over the course of a loan. This is why being self-aware on what car you buy is so important, and that's why you have to recognize that your car is going to be losing 15% a year because of depreciation. But don't worry, I understand the struggle because at the same time, it's taking longer than ever to save for a new car. If you take the average salary of $60,750, it takes about 43 weeks to save for a new car, and that number climbs to 50 weeks if you include loan interest and fees on top of that. And that's due to the fact that car prices have actually gone up exponentially, but wages have only slowly increased. It sure feels like the days where you could just work all summer and then buy a nice car at the end of the summer are totally gone. Instead, you work all summer and you're buying a glorified go-kart. In an ideal world, you would hope for some give and take. The dealers and the manufacturers give us terrible prices, so then the insurance and state, they take out and give us some nice discounts. And nope, this isn't happening. First off, one of the biggest ownership fees that you should be considering is gas prices. When the pandemic first started, I remember this crazy story of how oil prices actually went negative. I filled up my 2010 Silverado for 98 cents per gallon. That made me excited because I will be able to tell my kids one day that I used to fill up my tank for below $1. But yeah, that story is not the same anymore. The average gas price in the US is $3.71 a gallon right now, which thankfully is down from the peak, because the peak I think was like $5 a gallon just a short time ago. All of these factors though go into how much it costs to own and operate a car. Like, just buying the car is half the battle. Here in America, if you have a vehicle on the road, you are required by law to carry auto insurance. What you're not required to is have all the auto insurance companies charge us the same amount. This information will shock you. Over the past 10 years, insurance rates have been steadily increasing and are expected to rise again by 8.4% this year. And if you're a 50 or 60-year-old female, well, you are in luck, because you are the cheapest to insure by $1,800 a year. Unfortunately, my demographic, if you're a male under 20, you get hit with the worst insurance rates, and you pay an average of $4,600 per month. That's like 3 times more. Insurance rates are just like a giant stats class, basically. They profile certain groups to see how risky of a driver that group might be. And if your group or gender or age loves, let's say, street racing, then you are absolutely screwed, okay? Males under 20, remember, the insurance companies will never lose. Essentially, it's the safe drivers that are gonna be paying for the mistakes of the risky driver. Think about it. If you're paying $2,000 a year and you never get in an accident, the insurance company never has to pay for that. You're just donating your $2,000. But if someone who just recently took out a policy gets into an accident, well, now they've only paid $2,000, but their damage costs $30,000. It's you that's paying for that. What I found was super interesting is how much insurance can actually vary from state to state. The most expensive states are Florida, Louisiana, and New York, but with Florida charging $3,300 for a year of insurance, but Vermont only charging $1,066. So why is there a $2,000 difference? There's actually a number of things that make it very expensive, like lots of traffic, there's extra insurance involved in Florida, expensive healthcare costs here in Florida, and the biggest problem though is uninsured drivers. Florida has roughly 20% of all cars on the road are uninsured. The national average is 12%. This is not cool. This means that the insurance companies have to charge extra in order to subsidize in case one of their customers gets into an accident with an uninsured driver. And this was the biggest shock when moving to Florida. When we moved from Wisconsin to Florida, we were paying about $80 a month for full coverage insurance. So when we got hit with the bills and quotes over $400 for a month of coverage, you can imagine how upset and disappointed we were. Small price to pay for no snow and beaches though. I will say though, we did find some unique ways to save some money on insurance, so I'll go over that at the end. Now we gotta speak about something that you might have a little bit more control on, and that's repair costs. But Austin, they can't control how much I charge you to replace that timing belt. Okay, yes, you don't have that much control, but you do have control over the type of car you own. And there's a huge difference in repair costs from brand to brand. It's no secret that different brands have different ownership costs. Like Think when you own your Lamborghini, okay? You have your Lamborghini Aventador. It's not gonna cost the same as a repair on your Toyota Camry. Car ownerships are calculated on how much your repair bill costs and how frequently those repairs will be needed. Brands that are most expensive are BMW, Mercedes, and Cadillac. And the cheapest brands are like Honda and Toyota. But what I found was interesting was in the luxury car space. Among the cheapest ownership costs for a car series is the Tesla series of cars. And I think it comes down to not having an engine, so there's not as many moving parts, but kind of interesting. But honestly, I know a Tesla is probably not in the talks for most of us. So let's talk about what you can do to save on your car. Let's call it car usability costs. First, we got to talk about the elephant in the room though. Why is Sally, the high school teacher, driving to school in an $80,000 Land Rover? If you're making $55,000 a year and you're buying an $80,000 car, that means you are willing to give up a year and a half of your life just to be seen in that car. Yeah, be seen in the car, because unless you're a crazy car enthusiast, I don't think you actually bought that car for yourself. I think we got to start talking about how valuable your time is. I don't think for a second that your Land Rover or Mercedes is worth over a year and a half of your life. You could have spent that money on vacation with your families, and that will actually have memories that you'll last forever. Instead, you bought a freaking car. So my tip is to let your ego go and buy a car that aligns with your budget. Interest rates are crazy high right now, so if you can do anything to buy that car in cash, please do so. And if financing is the only way you can go about things, then you shouldn't really be spending more than 15% of your monthly income on a car. For an example, if you make $1,000 a month, you are allowed to spend $150 on payments. Should still buy it in cash though. Don't be afraid to buy a used car. In fact, most of the time, used cars are gonna be the best value. ChrisFix from YouTube makes a great checklist to buy a used car, because I know how it can be so intimidating to buy one and not know how to inspect it yourself. It shows you step by step how to perfectly buy that first used car. And maybe you don't need that $30,000 ride, and when tough times are coming ahead like they look like they are, I would at least consider maybe a $10,000 car. That 20 grand is going to be so much better when you can invest it at a great price coming up. And one of the most expensive aspects of owning a car, like we talked about earlier, is insurance costs, but there are ways to save. The biggest mistake I see when people are buying insurance is only getting one quote and then buying the insurance off of that one quote. I bet you'd be surprised of how much insurance rates actually can vary. Between the average cost of Geico and Allstate was double. Now, yes, Allstate won't be double every time, but my point is if you get multiple quotes, you can actually compare and go with the best option that meets your budget. Like I mentioned earlier, when we moved to Florida, we were shocked of how much car insurance was. Here might be the best tip in the whole video. We actually got our insurance at Costco. Yeah, that store that sells the $1 hot dogs and the $5 rotisserie chickens. But we were shopping for other quotes. We were getting quoted around like $350, $400 a month. I thought that was absolutely crazy and ridiculous. So we're like, might as well give Costco Insurance a try and see what they send back to us. Their quote was $120. That was a no-brainer to us, so it would be worth your while to go check out Costco and see if they can help you on any insurance rates for yourself. Saving that much easily pays for the membership costs. That brings us to our next tip, discounts. As someone who loves discounts, and we will literally choose restaurants based on whether they're offering discounts or not, insurance is the easiest way to find new discounts. And there's so many discounts out there, but the popular ones are like a low mileage discount, loyalty discount, safety feature discount. But the biggest discount is usually a occupation-based discount. Maybe something like military or teachers or healthcare workers. It's easy to shop around and find these deals. And at the end of the day, you have to remember that your car is a depreciating asset. So what you can do is you can take care of the asset and make it last longer. Well, what do I mean by that? Change your oil every 5,000 miles. Cheaping out and waiting to change your oil until the end of its lifespan takes precious time off the life of your engine. And if you let this get out of hand, an engine replacement could cost between $4,000 and $10,000. So change your oil with synthetic every 5,000 miles. And if you live in a colder climate, I would wash your car off. Cities, to get rid of ice, they usually use salt to melt the ice, and when the ice gets stuck on your car, specifically the metal bits, it begins eroding away at the metal pretty quickly. That's why you see rust buckets when you go up north, and down south, people tend to have their cars last longer. So go to the car wash and wash it with water only and just focus on the underside to get all the salt off regularly. The price of car ownership has gotten crazy. With hard times coming, I think it's very responsible to make changes now. That way it can help you down the road later. If it's your ego, let it go and drive a car on your budget. If you bought a sports car with $50K over sticker price, shame on you, but it's okay. Start making things right now. Downsides, start saving money, and I don't want to see people going bankrupt because of the cars that they have. Cars are just bankrupting more people. Thank you for tuning in. I hope you learned something. Please like the video, and I will see you on the next one.